So guys, here is a special invitation for Investival, which is an investors conclave, which is going to happen in Bangalore in the month of April from 28th to 30th. This is a 3-day event, which will be a residential event. This is been happening, will happen in Taj Yeshwanthpur, Bangalore. It is a purely investors conclave where we are inviting very big names as investors. They will be sharing you a lot of topics on value investing, techno fundamental investing, momentum investing. We have categorized the themes. On the basis of the theme, the expertise will come and they will talk about they will share you the strategies and the investment ideas so that you can utilize in your investing journey. Next slide, sir. These are the investable highlights where we are expecting 200 plus professional investors to come and gather in this event. Plus, we are inviting 25 portfolio managers, 25 pan-India mentors. Also, as I said, we have categorized the 6 speakers on a theme based. Like, for example, momentum investing, we have a speaker called Sonam Srivastava from the Right Research. And for the value investing, we have finalized Gaurav Chopra, who is an excellent investor. I have been looking him very personally. Also, for the techno fundamental investing, we are inviting Vivek Masrani sir, who will be joining as a speaker for this event. And the rest, there are 3 speakers. We are very choosy to invite this. Good evening, ladies and gentlemen. Welcome everyone to Nifty Banker, India's first retail index traders online conference. I am Fazil Ahmed, Director of Education and Events at Traders Gurukul, and also the host for today's program. It's a great pleasure to invite every one of you to the 3rd edition of this Nifty Banker webinar series. I'm sure by the end of this program, you will have a lot of knowledge which can help you to make better decisions in your trading life. Let me also like to thank our media partner, Money Control Pro, the largest financial portal in India with millions of daily readership on their website. They have helped us to reach a wider audience in a short span of time. The speaker for today is Keshav Arora. He will empower us today with his special topic called Banknifty Strangle, combined position with the position sizing. Keshav Arora is a founder of Financial Monk, and also he's a second-gen trader. His dad is also trading since from last 2 decades, and he's been a full-time trader since from last 5 years. Also, he's a YouTuber with the same name called Financial Monk, and he keeps doing live trading with the amount of 2 crore on every Thursdays. And his remarkable journey is 100% success rate ratio in the live trading. That's a pretty much appreciation, Mr. Keshav. Mr. Keshav, on behalf of Traders Gurukul and Money Control Pro, I extend a warm welcome into our program as an elite speaker. Go ahead, Keshav, the stage is yours.
Thank you so much for the introduction, the warm welcome. Hello everyone, my name is Keshav and today we are going to study a very special topic called Banknifty Strangle combined with position sizing. Although looking at the topic size is huge, so maybe the session will also be like very lengthy, no? But let's get straight into this thing and we will bifurcate this long topic in very small parts. Like first of all, we are going to talk about Bank Nifty, and please mind it, this particular strategy not only applies to Bank Nifty but also to Nifty. That's why Bank Nifty, that N also is also have kept capital, so that Nifty and Bank Nifty, for both the things it is actually applicable. Reason being, today we are not going to study a particular strategy, but we are going to discuss a particular idea. Like what's the idea behind a strangle? And people often talk about sell this strangle, sell that strangle, sell 0.1 delta, 0.2 delta, 0.3 delta. So we're also going to cover the various terminologies used in this particular process, and also going to learn a very special method which I use for live trading. And I will also share my live account which I have taken as of now, that how much PNL I am running as of now and how I will be adjusting it. So you will learn the idea, learn the concept, and it's not only I will be giving out the gyan or the knowledge, but also the real life applicability that I am also trading it live on a 2 crore sized account. Yes. So let's begin with the topic. The topic's name is Bank Nifty Strangle combined with position sizing. So The first word is Bank Nifty. So you can use in Nifty as well as Bank Nifty. So confusion should not be there. Next, we are going to talk about Strangle. Strangle, as we know, is a technical terminology, those who are very new to the option trading world. What a strangle is. But before actually starting with the topic, the main part of this topic is position sizing. Position sizing is nothing but the main tool which I use for my trading. You might have seen that the accuracy of some people are very high, and the reason is not a particular strategy but how you execute it. If I have a particular stock in mind, let's say there is a XYZ stock, and I know the stock will go 100x in, let's say, 5 years. So if I invest a very small portion of my portfolio in it, even if it goes 100x, my wealth is not has not grown massively. But let's say there is a stock which is having a downtrend and the stock can give a 50% loss. So what will happen if I allocate a major capital portion in that particular stock? My huge capital will be destroyed. So position sizing is a very important component for investing. And now here we are going to talk about how you can use position sizing to your advantage in trading. Coming to the next slide. First of all, before starting the main topic, the question should be why option trading? पैसा तो कहीं भी बन सकता है, money can be made anywhere, right? So why exactly option trading? Number one thing in the cash market is that you can't actually short the stocks. Let's say you are bearish on a stock, you can only take long positions in India at least. And the what do you say that the cash market की कुछ limitations होती हैं कि you can't short, you can't actually have a risk management, you don't have a risk management tool inbuilt in the cash market. That is something which is available in the derivatives market. So the second point is you can also complement your cash holdings. For me, I'm just telling a fact, not a recommendation to everybody, but I am a 65% holder of my whole portfolio is in Reliance only. So 65% of my portfolio is Reliance. Now, if I just keep the Reliance in my portfolio, it will eventually give me some returns. But I also want some regular income from that. So that way, option trading sometimes help. And the technical name for what you do is known as covered call writing. This is something which you can even Google about it, and you can find this particular strategy a lot in a lot of books, in a lot of YouTube videos, or at various sources. So yeah, coming to the main point, that is why option trading. The main thing is managing your risk. If you buy a stock, the only and only option is either you book a gain or you book a loss. Either the gain can be very huge, very small, or loss can be very small, very big. But in option trading, what you have the advantage is even if you are in loss, you can manage your risk. And today I'm going to tell you a very small example of managing your risk. Many of you might have been using Strangle a lot of times, but I will give you a very different perception of how I make Strangles, how I execute them, and what are the current live positions I'm having right now. And after the session ends on my Twitter, I'll post what is the update of this particular thing at the end of Thursday. Like this expiry, when it ends, what is the thing? And eventually, see, this is not something that after this particular session, you will be best at strangles, best at strangle management, but this is a first step. The second step should be practicing it for at least 3 months, 5 months, 6 months, 1 year on paper trading, and then see if the style, if the thing actually suits you. And those people who do maybe straddles, those people maybe who do directional trades, this thing can also be useful to you, because in this session I will be discussing a very special formula. That formula can be used for improvising your risk management in each and every strategy. So this is not only a strategy which I am talking, but a risk management tool, a proper scientific mathematical formula which I will be giving you, which will help you in your trading journey very well. Okay, so बिफोर स्टार्टिंग कि एक्चुअल में ऑप्शंस ट्रेडिंग क्या होता है, हम समझते हैं ग्रीक्स क्या होते हैं. अब क्वेश्चन आएगा कि व्हाई टू अंडरस्टैंड ग्रीक्स, like let's start with the strategy, but let me tell you, before you actually do trading, you should understand what a particular instrument is. Let's say I ask you share market क्या होता है. Share market in the way cash market क्या होता है. Cash market is a place in where you buy certain stocks and you own that particular company, as simple as that. But if I ask you what is a option market, what is a derivative market, what is a future market, it's very tough to explain. But let's not go deep into what the derivative market is, what is future, what is option. I guess most of you might be aware of that. But I'm going to dig deeper into the concept where the understanding is very little of majority of the people who are trading here. Because you guys see most of the things which are there, option as a ticker price. Let's say option, let's say bank nifty option is trading at 200 rupees. You just see 200 rupees as a price, you don't see as a risk management tool. For understanding it as a risk management tool, you must understand how a particular tool is made. So in Greeks, we are going to understand how a particular option is priced. So there are 5 major standard Greeks. Also there are also advanced level Greeks which are known as Vana, Vam, Charm, but these are something which tell advanced knowledge about the options. That is something you can understand, but here we're going to discuss the basic things about Greeks. First Greek that I'm going to discuss about is delta. Delta is nothing but the move. Let's say a particular stock moves 100 rupees and the option prices also moves in the same direction in 20 rupees. 100 rupees move in bank nifty and the option also rises by 20 rupees. That means 100 rupees move, 20 rupees move. That means 20% of the move is captured by the option. 20% can be denoted as 0.2. This is known as delta. Delta means the speed of option with respect to its stock price or index price. I hope the concept is clear here. Next thing is known as gamma. Gamma is nothing but the speed of the option. I guess it will be a little complicated thing to explain, right? To understand or to explain. Let's go another way. Gamma is nothing but the speed about what's the speed? The speed of the option. Let's understand option price as a stock. Let's understand option price as a stock. If option prices rises by 10 rupees or 20 rupees or 30 rupees, that is one speed. Let's say it is moving at 20% up, 20% up, 20% up. Let's say 100 rupees option goes to 110, then 110 goes to 120, 120 goes to 140, 140 goes to 180, 180 goes to 300. See, the speed is rising. That speed is known as gamma. We don't have to actually dig in what is the gamma, what is the delta. I'm just giving you a basic idea about what are these things, and out of these things we are going to use a few things and we are going to apply in strangle and strangle management along with position sizing. So we understood two things: delta is move, gamma is the speed of the move. I hope the idea is clear. Next thing is Vega. Vega is the most important thing, and that's why people nowadays might be afraid for option selling. Reason being, Vega is nothing but kitna dar hai, how much people are fearful in the market, how much is the volatility in the market. Higher the Vega, higher the premiums, higher the dar, higher the parishani, higher the volatility. Simple. And the vice versa is also true. Considering today's situations, today's date is 23rd of January 2023, and as of now the VIX is running at 52-week low, and in upcoming 1 week or 2 week we are having a budget, and we know that at budget time people are very fearful. Fearful means Vega should be high, Vega means DAR should be high, Vega means volatility should be high. I hope the concept is clear. But as of now the Vega or the IV or the volatility is very low. Volatility is although high, but as per the option pricing the premiums are very low. That's why the whole January month, those who have traded January 2023 might have hit stop loss. Na buyer ne paisa banaya, na seller ne paisa banaya. Very few people have actually made money in the January month. And trust me, January is the month which will actually test who is a tough trader, because tough traders are made during tough times only, right? And this is a tough time. This will actually test if you are actually fit for the game or not. I'm not saying you should make gain in the January month, but you should be actually having a proper risk management thing, right? So we have discussed three things. Delta is known as move, gamma is known as speed of the move, Vega is known as how much volatile the instrument is, or you can say how much dar is in the market. Higher higher ho to acha ya kam ho to acha. For a seller we want low volatility, but extremely low volatility is also bad, because market may prices may show that the option prices may show that volatility is very less, but in reality the markets may be more volatile than what the option prices are depicting. This is the situation right now. This is the very reason why one should be trading with a smaller capital as of now. If you have 10 lakhs capital, you should probably trade with 1 lakh or 2 lakh or 3 lakh. That's why here you should reduce your position. So Vega is the most important element in option pricing decisions, right? And because of Vega ke through ही we have IV, Vega के through ही we have India VIX. We often say India VIX 12 आ गई, India VIX is 13, India VIX 30 हो गई. COVID के time India VIX even had hit 80 plus. So that is known as Vega or India VIX or IV. Through Vega, all these derivations are made, right? Coming to the fourth important or the fourth most favorite Greek of the option sellers, that is theta. Theta is nothing but the time. I said that Reliance might not go above 2800 in January month, let's say. So for that, if I say I have sold Reliance ki 2800 ki call, that means Reliance should not go 2800. Let's say for the sake of simplicity, Reliance is right now trading at 2500. And I have said Reliance 2800 nahi jayega. That's why I have sold Reliance ki 2800 ki call. As of now, I am winning the bet. I had betted that market ऊपर नहीं जाएगा, Reliance ऊपर नहीं जाएगा. But why am I not getting the whole premium? Because there are maybe 6 days left, 7 days left, 10 days left, 20 days left, 30 days left, 40 days left. So that is known as theta. I know this is very basic for the people who are advanced, but we should be clear about all these concepts: delta, gamma, vega, theta, and rho. Rho is nothing but the interest rates in the economy. Generally, interest rates change very less. Interest rate in the way the option pricing model, like the model's name, those who are very curious, you guys can note down this name, Black-Scholes model. Black-Scholes model is used to price the options. So interest rate is also an element which is used to price options, and rho is the element which actually determines that whatever the interest rate is, based on that options are priced. So you might be wondering, Keshav, what is the use of this rho? Actually, practically, at least for next 20 years or 30 years or 40 years, this rho is of no use. I just gave you an idea. It is known as interest rate, and if you are